Hey guys, stellar lumens ain't looking too stellar lately, but that's the same story across the entire crypto space, as well as the stock market. Pretty much every asset class has been bleeding over the past few months. It's been quite a prolonged correction, and we're really at the point where the immediate upside setup is all but dead. It hasn't validated yet. This is, of course, the 1 hour view in stellar lumens, and across every crypto, we're seeing the same thing. We had our 1, 2, 3, and what could have been a nice solid fourth wave in a leading diagonal structure has more or less collapsed. So it's not completely dead yet, but it's barely holding on with life support. So it doesn't officially invalidate until we break our low from February 24th of 16.2 cents. That's what it is for stellar lumens. The same holds for pretty much every crypto, which we may touch on momentarily. But right now our alt pattern, which was red, is looking more and more likely. So that calls for this being an A up, B down, and a C wave up. So it'd be a classic 3-wave corrective rally. So fake out with possibly a 1-2 setup to the downside in place. Stellar Lumens has one of the more clear and legitimate looking 1-2 setups. So when I mention 1-2 setup, we're referring to this final C wave to take us to our lower low. And that would call for at least a 5-wave pattern, whether it's an impulsive or diagonal pattern, depends. This is looking more like it's going to be impulsive, just because we've had a relatively standard looking second wave. So when we look at the internal structure, you got possibly a 1, 2, 3, 4, and a 5. So you clearly have 5 waves down. We have a 3-wave bounce right into our box. So that's 38.2 to 61.8% retrace box. Typically you expect a pretty sharp retrace, but this is definitely standard textbook. And we've seen similar in the S&P 500, where we had a standard textbook second wave counter rally. But we didn't really bounce as high as we've seen in past fake out rallies. So if that is the case, that tells us that we're definitely in the third wave down, and we should start seeing some more downside action, possibly as soon as earlier this week, into this weekend. So the S&P 500 fell pretty low, and we're seeing the same thing here. If we have the third wave, again, third waves are very sharp and steep, so there should be no question that we're falling red once this thing commences. So we should see a pretty steep pullback without too many counter rallies up, and we should break down through support pretty easily. So look for a sharp move down past 16.1 cents, and we shouldn't see any kind of bounce until we get to really 13 cents or lower. 13.5 cents could go as low as 12.2 cents on just this third wave alone. That's what I expect. And then we expect a consolidation and a final lower low that could take us as far down as 10 cents, maybe even lower. So how should you protect yourself? As I've been mentioning in other videos, I have actually taken half of my positions off the table. So I've sold half my coins, but by no means do I recommend selling or panic selling your entire holdings. These are the kinds of crashes that don't last very long. We're going to look at the big picture chart in just a second. For many of you, it may be best just to hold through the crash, because I expect this to be short-lived, and we might see a furious rally in the other direction. If you do plan to take some off the table, please make sure you have a reason to do so. Maybe you're going to buy the dip a little later. Maybe you have a lower risk tolerance, or you need that money for something else. If you're saving it for another investment, if you're trying to make a down payment on a house or something, probably not good to have that in cryptos, especially altcoins. So invest, divest based on your own strategy. Don't panic buy, don't panic sell. This is what we're looking for. Now I'm going to shift to the big picture chart on Stellar Lumens, in which I haven't really changed anything. We're looking for this correction to, really this pullback to continue, a much larger scale correction that we had going. That pink box down below is based on an extension of the AB that we do have in place already. So 10, 11 cents is the top of the box. We could have this thing go down to 4 cents or lower, although I wouldn't expect us to go that low, but expect us to at least get the top of the box. There is confluence between this logarithmic view and the targets we have on the small picture chart. So low teens, around 10 cents would be our target. So that's a pretty good ways down from here, about what is that, 18 cents all the way down to 10 cents. So could be quite a fall, 40-50% easily, but it would be short-lived. So as I mentioned, whenever we've had sharp pullbacks in the past, typically we have very sharp rebounds as well. So back in the March 2020 everything crash, we went down to 2.6 cents, and within a couple of months we were back up to 8.4 cents, and the rest is history. The same applies in the past as well. We had a pretty good spike down back in September 2017, it appears. We're down to, was that $0.007, so about 7.7 cents, something like that. And that was on, again, September 2017. By January 2018, we were almost at $1. So it just gives you an idea of why it's actually more dangerous to panic sell than to panic buy, because these things have been coming back, and there's no reason to believe that our bull market is over yet. We're seeing the same kind of action in the equity space as well, with the Dow and the S&P falling sharply with a bit more downside to go. It looks like we have a lower low to come. I've explained this in my overall crypto update videos, where we had the exact same thing happen starting on January or February 24th. Big three-wave pattern, could have been three waves, but it's better classified as an A, B, and a C, just like with cryptos. And well, we're finishing off the C wave of the overall correction. So could call this maybe a 3 and a 4th wave bounce, and a 5th wave that is still in progress. When we take our Fibonacci extension tool off of this thing, it looks, well, it very closely resembles what we see in the cryptos. We may extend a good bit lower. So more downside very likely ahead. That does not mean that the upside green pattern has invalidated. Again, if we tear back up and if we break 24 cents relatively quickly, the red pattern would be dead. So until we break 16.1 cents, the green will remain primary. But if that breaks, things will change. Another thing I would be looking for, though, my bigger cue is because we have such a clear 1-2 downside setup in Stellar Lumens, we need to see us break through this pivot. So that would be between the 0.618 and 0.764 extensions. If we break down through that, then that more or less seals the deal that our downside crash is officially in progress. It's more or less confirmed. So we need to get through this pink box and stay below the top of this box. That would more or less confirm that we're going to get down to this 3rd wave target relatively quick. So that is a cue to look for. We've seen that happen in a couple of cryptos. Bitcoin Cash in particular, I had an alert set for, so that one is fresh on my mind. There's a few other alerts that I have set in which we've seen the pivot collapse. Stellar, I've changed things around, but look for those pivots to fall over the weekend. So things might get bloody over the weekend. If not, look for some downside action on Monday, most likely. And I'll reiterate, don't panic. Look for this as a buying opportunity, because when we look at the long-term chart, there could be some incredible potential, especially when we look at the MACD, about to get pretty oversold here. Maybe we'll see a divergence. Whatever rebound we see could be absolutely incredible. We're going to see the same thing in equities too, most likely. When it's the scariest, that's usually the best time to buy. I'm sure the news all around, all the media is panicking over inflation and whatever's happening in certain Eastern European nations that I shall not mention. They'll take whatever they can to blame market moves on those. So again, keep your head above water. Don't forget to subscribe so that you don't miss any future updates. And if you enjoyed my video, don't forget to give me a like. Till next time, thank you for watching and happy trading.